All right, welcome back. Tech stocks back on top this week as investors look past the trade war, at least they try to, and refocus on the promise of AI. Software in particular outperforming today, which brings me to my next guest. He's ringing the closing bell today after a quarter century of making his mark on the industry as a leading software investor. Robert Smith is the founder, chairman, and CEO of Vista Equity Partners. He is with us at Post 9 in a CNBC exclusive, and I can't tell you how happy we are to have you.
Thank you for inviting me. Excited to be here.
Congratulations on this great milestone. I know you have many family members here, and you're going to be on that balcony, which never, ever gets old.
Never gets old. Exciting.
Could you have imagined that Vista would be where it is today, 25 years later, 90 portfolio companies, $100 billion in assets under management, 600 plus transactions, more than $315 billion in transaction value, and annual returns that are just astounding. I think somewhere around more than 30%. I mean, those are incredible numbers.
Thank you, Scott. Yeah, can I imagine? I think so. And I will tell you why. You know, I learned early on in my career as an engineer the power of enterprise software, which is what we focus on. It has been the most productive tool in our business economy over the last 50 years, and likely will be for the next 50. But it will now be powered by artificial intelligence. And so it's an exciting time to be an investor in software, an exciting time to be Vista investing in software.
We'll get into all of that, obviously, which I want to. You've managed through so many different economic cycles.
Right.
And crises that come up and other issues that you have to manage through. How do you assess what's happening right now?
A few things. In our world, you know, software has proven to be not only the most durable, but one of the most resilient in these environments. It has become enterprise software, mission critical, business critical. All industries rely on it. All companies rely on it. And in fact, when you have challenges with labor, you have challenges with trade in environments, people lean into software. In fact, during COVID, one of the expressions that occurred where people lost visibility on their supply chains, their customers, their even their own employees. And so as a result, they invested in more software, which actually created a pull forward of revenue, which is why we saw that peak in 2021. So the dynamic of enterprise software still powering really the connectivity in business hasn't changed. What has changed is people are gaining more access to it. You know, people now have the ability to invest in some of these private equity funds in enterprise software that I think is going to actually rebalance the opportunity set and democratize investing.
What do you make of the trade war? Where do you think how's it going to end?
I think there will be a series of bilateral agreements that will bring, again, a new equilibrium environment, which I think is what is sought after at this point by numerous parties.
A balance.
A balance, but it's a new equilibrium. And will be different than what it was, and hopefully it will be more fair for countries that felt that they were being abused in certain dynamics. And I think that will then reignite the markets in a way that will create a roaring opportunity to take advantage of artificial intelligence being introduced into each of these businesses and these industries.
How are you thinking about the kind of time frame? Because you need to think about all that kind of stuff when you're thinking about where you're going to be investing.
Yeah, there is this predictable volatility for a period of time, and I know the Treasury Secretary came out and said it'll be 90-day pause through the administration to actually work on cutting these trade deals. And my guess is there's going to be, in that period of time, I hope, a number of trade deals that now settle the markets, give visibility, give transparency as to how we're going to interact as trade partners throughout the world. I think you'll see certain blocks starting to form and crystallize. But people realize I have the great opportunity to be investing in all over the world. We operate in 180 countries. And you can see the demand and the desire for people to get back to some business as usual and trading with some clarity as to what the agreements are.
I found this interesting article today entitled, "China has an army of robots on its side in the tariff war." The point being is that we're not the only ones who are trying to make this tremendous leap forward.
Right.
How do you think about that?
We've known about this for some time. You know, once we distributed compute, which we have over the last 20 years, for many years, compute resided in a few places. And then once we got the cloud compute, it resided pretty much ubiquitously everywhere. And as a result of that, people could access it, utilize it, and that created a massive opportunity for invention to occur around the planet. And of course, in certain pockets, others outstripped others. So, you know, we've known about this for quite some time. You know, we, of course, continue to rely on our education systems in America, the way that our businesses are organized, and free enterprise. Free enterprise for people like me who grew up as a young lad in Denver, Colorado, the son of school teachers, to build a business based on technology, software. Very few places in the world does that occur. And so I think in America, we still have infrastructures and institutions that enable that to happen.
We talk about tech and software probably every day in one form or fashion, just because it's such a popular place for our viewers to be investing. You look at what's happened with technology, stocks. Your bread and butter, obviously, is enterprise software. We track it through the IGV, right? The ETF that tracks the space. It's down about 15% or so. Do you think that area has corrected enough?
I think what is happening is there's a major bias right now towards artificial intelligence and artificial intelligence infrastructure. The vast majority of capital is flowing in that direction. And as a result of that, people haven't realized, like in every other cycle, hardware vendors typically get the first wave of the economic rent in technological advancements. The second wave goes to typically infrastructure providers. The third and most profitable wave usually goes to software, and enterprise software in particular. And so there will be a period of time, which, in the downturn, we've now taken 6 companies private. We've also done a number of private company transactions. When these companies become agentic or Gen AI enabled, that you really start to see the benefits of what this new technology and how it will feed software. That's the advantage of being in the private space that we're in today.
Part of the point you're making, and in the list that you just gave, is that you think software may be the last to see the great benefit, but when they do, watch out.
It is huge. Because remember, we don't have CapEx requirements, and we have massive productivity. Our average company, which we measure today, the products they serve their customers is over 625% ROI. There aren't any other businesses that have that sort of return on investment. And when you supercharge that with agentic software and artificial intelligence and Gen AI, the ROI will go up exponentially. The real question is, how do you ensure that you distribute this effectively to your consumers and your customers so they can take advantage of these tools as quickly as possible so that they are more competitive in the markets that they serve?
You're talking about traditionally what has been looked at or called the rule of 40, potentially becoming exponentially larger, a rule of 60. I'm trying to think of how our viewers should be thinking about this whole space and the growth that you foresee it having.
Sure. To give you just an example, every level in the P&L statement will have some impact. AI will have some impact on it. If we just take code generation, in the world of enterprise software, that makes up a pretty large chunk of our costs. And we actually I had a few of the folks who are running these big LLM systems that now actually have code assist tools that they've introduced into our markets and our environments, some of which we have very exclusive partnerships with, that can reduce the cost of code by 50, 60, 70% in short order. And so the productivity and the reduction of the cost of code creates a massive increase in the P&L. So that's how you can go from a rule of 40 to a rule of 60, rule of 70 in short order, utilizing an AI tool on just one aspect of the P&L statement.
I talked to you about how the space has corrected in terms of equity prices. You must look at the opportunity that comes through the dislocation.
Absolutely.
How so?
Well, part of for us is, we look in our flagship fund and which are the deals that we should take private in these environments that may be lagging in their adoption of the next generation of tools. One of the things we did very effectively in the last cycle when we were converting from on-prem to cloud was identify those businesses. The public markets punished those companies that didn't make that conversion fast enough. We were able to take advantage of that, buy companies, transform those businesses, and actually accelerate their growth and their profitability. There's going to be something similar occurring from companies that are now cloud native or on the cloud to agentic. And building an infrastructure to do that effectively at scale is part of our mission.
When you have valuations correct, theoretically they become more attractive for somebody like you for potential take private.
Right.
Correct? I mean, you've done, I think, a half a dozen since 2022.
Correct.
Where do we see that moving forward? I mean, what does the marketplace look like to you now? Is it getting to the point where you're starting to say, okay, we're going to have some real opportunities that we might not have had a few years ago because valuations were too high?
It is in that point today. As you say, Smartsheet was the latest one that we took private. We have our eye on 5 or 6 others that we think are going to be exceptional companies when they become agentic and when we can convert those businesses to be Gen AI enabled. And so you will see us continue to take deliberate, focused and measured action in that regard in taking companies private in this environment.
I watched a talk that you gave at North Carolina AT&T where you described being the first M&A banker on the ground in San Francisco back in '97. Right. You were a mentee of Gene Sykes. Right. You called the best M&A banker who ever lived. You saw, my point is, you saw the internet, right, if not at its most nascent stage, in its middle school years, maybe. Right. So you have good perspective between then and now. How does this revolution compare to what you saw then on the ground?
Orders of magnitude greater. However, it's not going to come easy. You will actually have to embrace this technology and actively drive it throughout your organization. People are often resistant to change, reluctant to make change. This technology, as we've seen it across our portfolio, 100% of our companies now are using code generation. 100% have a product to market or under development, and 100% are using it for reduction of cost in the implementation of their actually operating their businesses. But it takes an evangelical type of a fervor to get people to adopt this technology. But once they see the power of it, you see an acceleration of the utilization of it. That's what's happening today, and it is orders of magnitude. That's 625% ROI, orders of magnitude more benefit to our customers.
Bain & Company wrote in its 2025 global PE report of you guys, quote, "It's safe to say that software specialist Vista Equity Partners has gone all in on generative AI. Firm leaders are already convinced AI represents a paradigm shift in innovation that will ultimately create a multi-trillion-dollar investment opportunity." That says very much this is very early innings in your mind.
It is very early innings, but you have to get there fast first. And I think that's an important part of what we're focused on.
So first matters. First mover matters.
Absolutely. In certain industries, this technology is so powerful in what it does. You have the ability to not only turbocharge your value creation for your customers, but it will actually give your customers the opportunity to be more effective in their markets. And so I believe the consumption dynamic, when people see the value of it, will be absolutely exponential in its draw.
Because we're trying to sit here and pick out the winners, and I almost thought that you were going to say there's going to be many winners. Yes, it's okay to be first now, but you don't necessarily have to be first to take a lot. And that there can be many, many winners.
There can be many winners, but there are going to be losers in this market. What's going to happen? Certain companies will become agentic. Certain companies will, I'll call, become Gen AI enabled and their customers. Others will not have a right to exist because they will not have adopted and evolved properly and fast enough to take advantage of this technology, and their competitors will eat their market. So that is something to be very conscious of and focused on.
Data centers, one of the fastest growing areas. We talk about it obviously all the time, and I know you think about it all the time. You acquired Logic Monitor back in 2018 for $415 million, partially realized at a $2.4 billion valuation last year. There's a little bit of a fear on the street that there's been some overinvestment in data centers. How do you respond to that?
I don't disagree with that.
Oh, you don't?
No, I think, again, from our calculations, it's our calculations, we calculate over $1.5 trillion of expected capacity going into the marketplace. Now, of course, there's all sort of activities, these are data center capacity, all sort of activities around the power, use, generation, ability to deliver that power, cooling. There's a lot in that supply chain that will take some time. And of course, everyone's thinking selling that capacity to the hyperscalers. Well, at some point in time, you have to start looking at what hyperscalers need, what capacity, what levels of latency, et cetera. So there's a dynamic there that, quite frankly, I'm not sure all the equilibrium sets are fully understood. In the way that we look at it, we think there's overcapacity for the utilization requirements for agentic enterprise software today.
You like that term. The equilibrium systems is something that has driven you from your days as a chemical engineer, that there was no difference in your mind. If someone says, well, how does Robert Smith go from being a chemical engineer to the foremost software investor in the world, it all is tied together through that, where you saw the equilibrium systems then, you see now through software and markets.
Right. This is all an equilibrium system, the buying and trading and finding different levels of value. What is something worth to one person versus another? An asset, one person's asset is another person's liability in certain of these marketplaces. So part of what we have to do is identify not just the equilibrium state, but what are the things that are changing that state? Introduction of new technology, introduction of liquidity in the marketplaces. Those all change the state of that equilibrium. Identifying it, embracing it, recognizing it, and delivering that as value to, in our case, our shareholders, our stakeholders, what our job is.
Okay, you're celebrating 25 years.
Yes.
I've mentioned you're one of the most prominent voices in finance. Given your philanthropic endeavors as well, the incredible Morehouse gift, and how you think about the future and the future leaders of this country, I want to ask you about DEI, which has become a huge target, as you know, by this administration. You said at the Economic Club of New York a couple of months ago, quote, America should be a place of meritocracy, but not just meritocracy in race, but meritocracy in an opportunity set. Right. Explain what you mean.
That's what it's all about. We have to open the aperture of opportunity so our people, our Americans, can participate in this great experiment, this great idea of America, which means how do you get the smartest people? People who grew up in certain economies, they may be brilliant, but may not have access to opportunity, irrespective of race or gender. Part of our job is to make sure that we, as business owners and business managers, open up the opportunity so everyone has a shot and everyone has a chance. And that's what the promise of America is all about. So it's our job to ensure that we do our part to ensure that happens. It also shown that the more diverse workforces are and boards, the lower the risk, the higher the returns. So the math supports the idea. We just need to make sure that the windows of opportunity, including internships, are open and wide enough, and we are consciously looking for ways to improve the quality of the work that we do across every industry.
You mentioned the way that it was administered, I think was the word you used, as maybe being the issue. It almost takes me back to the way you look at equilibrium, whether it's in chemical or markets. Did we get out of balance too far in the way we approached DEI? And are we in danger of swinging back too far the other way? And do we need to find our balance?
As you say, that's the definition of an equilibrium system, right? It goes through swings. And at some point, we will find what is the proper balance where we have stability and opportunity can actually produce the best results. And that's part of what our society does. It goes through these swings, in different ways at different points in time with different magnitude. And so part of what we have to do, if we think it swings too far one way, then typically there's a force that brings it back the other way. But we as business owners have to do what's best for all of our stakeholders, which include, of course, our investors and our employees. What is the environment that they are living in and they are working in that makes them most productive and brings the best minds, thinking, capabilities into that environment every day? That's what our job as senior executives is, in my opinion.
We didn't even get to your book. We'll do that next time because it comes out later in August, I think, correct?
Yeah, it is. I'm excited to see it.
All right, you have fun on that balcony. Thanks for spending time with us.
Pleasure.
Congratulations. It's Robert Smith being with us today here at Post 9 of Vista Equity Partners.